Hey everyone, this is your weekly market review. Obviously, one before the holiday season. So, happy holidays. If you're celebrating Christmas, Merry Christmas. And for the new year, a very happy new year to everyone. Okay, so let's just jump in straight into some of the fundamentals that we need to talk about this week. Obviously, we have the RBA meeting minutes. It didn't cause a lot of impact in terms of whether or not the RBA was a little bit more hawkish. Yes, they were a little bit more hawkish compared to all the other central banks. I think the RBA is probably the one that hasn't even mentioned anything about a potential rate cut in 2024 as of yet. So that does push the Aussie a little bit higher. And then we have the Bank of Japan interest rate decision, and again, Bank of Japan kind of surprises the market again by being a little bit more dovish. There was no mention of moving away from negative interest rates. They did talk a little bit about a wage being still being too low for them to actually move away from negative interest rates. So there was no official confirmation from the Bank of Japan in terms of the negative interest rate, which is not what we expected. As we previously mentioned in the outlook, I think the expectation was for there to be an official confirmation by the Bank of Japan that they are intending to move away from negative interest rate decision. We didn't see that happen. There was no changes to the interest rate. It's still at negative 0.1%. There was no mention of any move away from negative interest rate, not until the first quarter at this point in time that we're estimating. So there's nothing official coming out from the Bank of Japan. So obviously that kind of pressured the Japanese yen again. Japanese yen was dropping, and we see a little bit of recovery on the dollar Japanese yen, the euro yen, and the sterling yen on that note. Now, other than that, we are going to be focusing on the UK inflation number. If you take a look at the UK inflation number, it does cool off a little bit from 4.6% to 3.9%. That's a lot lower than what the market was expecting at 4.4%. The core numbers also fell off from 5.7% to 5.1%. That was a significant drop on that inflation. So there are now considerations in the market that the Bank of England will probably follow suit with what the ECB and the FOMC is likely going to be doing, which is starting to talk about potential rate cuts in 2024. Obviously, that does cap the progress on the sterling. Still strong. We'll show that to you on the technicals. It is still a very strong sterling at this point in time, but there are talks about that rate cuts, and it does hold it off a little bit from progressing any higher. Now, last night's GDP number from the US, this one here was below the consensus. Consensus was 5.2% for the final quarter, and that was a jump from 2.1%. We still see that growth. It is still coming in at 4.9%, which is still a significant feat considering the previous quarter was at 2.1%. So we actually do see the GDP growth kind of doubled, and that causes a little bit of not a confusion, I would say, but it leaves the market divided because people reacting to the numbers not meeting up with consensus does put a lid on the US dollar strength. But if we take a look at the general notion on everything here, it is still a significant growth on the GDP from 2.1% to 4.9% in one quarter. I think that's still a significant feat, and it does shows that the US economy is still growing at a strong pace at this point in time. So I don't think it was that bad of a number. It was 4.9%. Sure, it's still below 5%, but not that much below 5%. All right, then we just had the recent inflation number coming out from from Japan. This is just in, and we can take a look at the headline inflation there, dropping down from 3.3% to 2.8%, and for core numbers, it was 2.9% all the way down to 2.5%. So it does kind of help out a little bit in terms of the Bank of Japan, holding interest rate at negative at this point in time. No changes to the monetary policy because they feel they don't need to change the monetary policy to bring inflation down, and it seems like inflation is still under control. And if they were to move away from negative interest rate, this monetary policy, then it would actually hamper inflationary growth in Japan, Japan is slightly different because they need to keep that inflationary growth a little bit higher, and that's probably why the Bank of Japan kept interest rate unchanged at negative 0.1%. All right, so let's just jump into the technicals. First thing first, let's take a look at the Dow Japanese Yen. So the Dow Japanese Yen, we were talking about a potential pullback towards that 144, 145 level, and we got exactly that. So we actually do see that recovery towards 144, 145, and obviously that final push is also on the back of the Bank of Japan not adjusting their interest rate. But technical does plays out where the point of rejection is, which is in the middle of the fair value gap, which is a consequent enrichment. That's at 144, exactly at 144, and then we saw that higher. The highs on Monday, that was a little bit more on at about 145. So this one here, we're looking at a downtrend continuation for the Dow Japanese Yen. Now if we move on to sterling yen, very similar situation. We saw this one rejected at the Shimoku Cloud, rejected at 184. So this one here, the downtrend is still intact pretty much on the Dow Japanese Yen and the sterling yen, as well as on the Euro yen probably not so aggressive compared to the sterling yen and the Dow Japanese yen. But in terms of whether or not the Dow Japanese yen and the sterling yen has corrected itself for further continuation to the downside, and I believe that would be yes, it has done so. In terms of how far are we going to be looking at for the drop in the Dow Japanese Yen, currently we are at support about 142 at time of recording. We're expecting 141 to be the next available support level for the Dow Japanese Yen. If we take a look at the Aussie USD, this one here actually broke through a lot higher. It actually breaks through the bearish order block there at about 67 cents and actually grinds higher. We are at about 68 cents at this point in time. No longer looking for a short because it's going to be a tough one to look for a short as we broke through that 67 cents order block. So this one here, the range has already moved up, and in terms of whether or not the trend is likely going to continue to the upside, I think so. At this point in time, we are no longer in range for market condition. We have broken through 67. That level, that order block itself has been tested this week, and price has moved on away from 67, and we are at around 68 cents at time of recording. Any break above 68 cents, we're probably going to be leading up a little bit higher towards 69 and potentially even 70 cents on the Aussie USD. But this one here is probably the unique one, because if we jump into the Euro USD, you can see where we are right now at Euro USD. We're still capped by that 1.1 level. We did close above 1.1, but we're not really far off from 1.1. So today market needs to close above 1.1025 for that resistance to be broken. And the same consideration that I have here from the outlook was that we still have that regular class A bearish divergence on the Euro USD. So still food for thoughts here that we're not really quite safe yet in terms of whether or not the Euro USD can actually climb higher. There is still that divergence to be considered about, and in terms of the liquidity area itself on the Euro USD, it's actually from 1.10 to 1.1025. With the pound USD, as I said, this one here was a strong currency, and we actually managed to hold off from the fair value gap itself, which is around 1.2650. So we're still hovering about that level, and I think we need to break a little bit higher. I think market needs to close above 1.2725 for this one to continue its uptrend, for any upward trajectory towards 1.28 or 1.2850. Pound USD needs to have a daily close above 1.2725. Now, obviously, today is Friday, and holiday season starts pretty much today, right? Because Monday is Christmas, Boxing Day is going to be on Tuesday, and then a lot of people are probably not going to be trading anymore. So just keep in mind, there's going to be a drop in volatility. There's going to be a drop. There's going to be a drop in volume, but volatility, it can go either way. But there's definitely going to be a drop in volume. There's going to be a drop in momentum. So price could actually get stuck for the rest of the week, for next week, because of the dates on when the holiday comes in. Monday is going to be on Christmas. Tuesday is going to be Boxing Day. So just be mindful if you have a position, if you're holding it over the holiday seasons. just make sure you're able to weather out the volatility, or whether or not if there's actually going to be any swaps or anything like that. Just be mindful of the position that you might actually need to hold that position all the way until the new year for any swing positions. All right. So with that, good luck with your trades. Happy holidays. Have a fantastic Christmas, and enjoy the new year. And we'll see you again next week. We'll post an update on the 26th. With that, good luck with your trades. Have a fantastic weekend.